Good morning, it's Harvey Jackson. Just going to go through some what is maybe making some of this market rally here a little wee bit here. The Middle East conflict has the Canadian dollar actually rising with the oil, and it's acting like a oil dominant country now with its Canadian dollar rally, and a little bit on the WASDE results and some more weather maps, of course. So here's just Israel strikes Iranian nuclear facilities and fears of a war, and there's tensions throughout there with Israel and the Middle East, and that's just making crude oil absolutely jump to multi-month highs here. Soybeans are rally a little bit because of the oil actually, and that's helping out that. And I would say the same thing with the canola. So I just snipped this here from source here, and they just kind of color coded what is the most important or whatever, and there's really nothing in the soybean side of the production or corn of the U.S. that's causing any big fear there, but there is bullishness on the wheat side, but more so on the world side. So the U.S. ending stocks on wheat came in a little bit lower than expected, and even with the world. So that's actually helped out. Corn is the other bullish factor on the world ending stocks. It's going to be ultra tight. So the ADM sets off frenzy of U.S. Soybean market ahead of the biofuel blend rule. So there's the expectation that there's going to be some blend rule stuff out here. So here, maybe I'll point this out. What ADM is rolled over to the new crop November on an inverted market, and there's a lot of people talking about it, and they're kind of ticked off because of it. But Canadian retailer buyers do it all the time. I would expect more and more buyers are going to be moving over to November very soon, and there is no rules when they have to roll. But usually the U.S. Buyers of grain, they wait until the very the last week or almost the very end before the rolling contracts. The Fed is expected to keep rates steady, so no decrease, no increase. At least that's what is expected anyway, and because of tariffs. So let's just have a look at the drought monitor. You can see that there is drought, and it does move in the Canadian picture. We'll see that in a little bit here as well. But basically everything, except for spring wheat, decreased in drought. A little bit of barley, but that's in the north as well. But you can see that there's maybe the differences between the east and west. So here's the kind of a North America picture. Mexico is absolutely, what are they, on the 4th or 5th year drought? But you can see that there's a fair bit of drought just in the GRACE model for soil water drought indicator. Saskatchewan came out with their report yesterday, and you can see that there's an east versus west, where actually east versus west, just rainfall in the week. So caught some rainfall, and then you basically got nothing farther west and to the southeast as well. Here's your cumulative for the whole month. So that wet corridor down in the southeast has gotten rain and excess, but there's virtually nothing in some of these other areas. And I showed this yesterday, dated, but it's still relevant with the new data, and there's still lots of drought in Saskatchewan. But you might as well say west versus east again. Here's your soil moisture drought model. You can see that there's a fair bit of drought in that area. Now that's going to cause a lot of plant stress. Now, if we can get moisture, so the European, the ECMWF 7-day doesn't show it in here, but then when you start looking at some other models, here's just your radar. Some other models, it's in the next 7 days, you're seeing a build of moisture here, and this is the GFS, and here's the EC. So conflicting itself somehow, I don't know. And then the NBM model shows moisture in there too, so I'm sure everybody will be happy to see it when it does happen. Canola is up, European rapeseed up, soybean oil is up almost a full penny, or soybean oil, up almost a whole penny, and all the wheats are up as well. Just want to remind you, looking at this seasonality, it depending on how things go, you're looking at anywhere in this timeline, and it always also pushes out to the very end of June, that you could actually continue to see the November contract make highs, right? So here's your July contract trying to get back to some of the highs it made. November actually broke through and finally showing some strength. Now, is that from the war or the possible Middle East conflict, or is it because of drought? I'm going to say it's probably a blend of both concerns, but you know, because it will kill this crop a few times in this growing season for sure. What I'm just going to just point out here is your open interest and your volume. So you're starting to see November contract adding a fair bit of open interest, and this one is decreasing a fair bit. It's not taking the lead anymore. November's kind of taking the lead, and that's why you would see vendors obviously moving over to November contract, and that's actually probably helping this market as well. Just moving ahead of the end of the week here. Here we've got the rapeseed, and it's at the top end of this channel. I'd like to see it break out, especially just ahead of harvest. That would be a sign that they might be a little bit short. Soybean oil at the bottom end of this channel going up, but still green nonetheless. Soybean futures. I'm not saying I like this trend, but it's kind of chopping around, but it is green today, so it's following some of the short-term moving averages. Here's your crude oil, and it actually even got to close to $78, and a huge jump. Canadian dollar following that trend. So petrodollar, here we are. We weren't always trading like a petrodollar. Here's the November or the July contract of wheat. It's green on the screen and bumping its head against its long-term moving average, the 200-day. Here we are with the December contract, and like to have this rally some more and get back to highs that we saw late last week. Kansas, not the same kind of trend as the Minneapolis, and neither is the Chicago wheat. Corn futures, I would expect to have seen a little bit more rally in there, but the North America crop is not in bad shape. It didn't really tighten a big pile, the North America crop, but the world crop did. Live cattle, would like to see this kind of trend in other commodities other than live cattle and feeder cattle, but both of them are just continue to make a new high, pull back a little bit, make a new high, find some more demand. And hogs, the same kind of thing. Short-term moving averages way below, and continue to stay on fire. And that's all I have for you today.